Hello and welcome to another update video about the Pyth Network. It is, a chart that's also now joining the correction, obviously, Bitcoin's correction, and was one of the charts that we identified with a potential 1-2 setup here. We had a reaction to a support range on the 5th of March, and then since then never dipped into a support area again. Okay, so actually it's worked quite well. You may remember from previous videos and updates for gold members that we had a support zone here. Granted, most people, well, a lot of people may not have been able to enter there because it just dipped into it very briefly. But you don't need to wait for a support area to be reached to buy. You know, you can always buy a little higher, but then you need to adjust your support. You need to adjust your position size. The further away you buy from a support area, of course, you have to adjust your position size because the further away from a stop you are or you buy, the smaller the position needs to be. Okay, because the risk is higher, right? Far away from a stop, risk is high. Closer to a stop, risk is smaller. Or you can keep the risk the same by adjusting the position size. Just simple trader math. But it's possible that we now dip into the next support region. And it's a little high so obviously the count is wave 1 up, wave 2 down. Shallow wave 2, but reached, I think at the time, the 38.2 fib level. Here, another 5-wave move to the upside. Wave 1, wave 2. Little high for a wave 1, but not too high to be reliable. Ideally, it would not have exceeded the $1.04 level, $1.03, $1.04, but it's really the $1.29 level that's critical for such a wave 1. Yeah, if it gets above that, then we have a different count. But because it was rejected before breaking above the 78.6 extension, we have at least a count which we can see as a bullish 1-2 continuation pattern, which means that as soon as this wave 2 is over, we could see a third wave rally to the upside. So the support is for this wave 2 between 56 cents and 81 cents. And oftentimes in a wave 2, we might see a support, or we might see the price hold a 38.2 extension as well. So it's good to see that this extension level at 76 cents is within the larger support area. So just an additional level to watch there. We have support at 81.4 cents, 73, well then also 76.3 obviously, 65.5 and 56 cents. I have to be very clear here. There is nothing clearly bullish anymore on this chart if we see a break below 56 cents. There is nothing clearly bullish. A break below the 78.6 fib level of this 1-2 setup leaves me with no clear forecast to the upside. It would then need to rebuild impulsive structures because any sustained break below the 78.6 fib level will mean that we're likely going to see invalidation. And the invalidation point for this 1-2 setup is down here at around 45 cents, 45, yeah. That's the formal invalidation point, but we are looking at probabilities here, and we basically know that most of these setups fail if there's a break below the 78.6 fib level, but we have to give them that amount of space. Now, I don't necessarily assume that this wave 2 will be so deep, so it can be shallow. We are still in a bullish market. I know red days and, red candles, but I just, from what I see right now, I have no confirmation that a bear market is unfolding or something more bearish. We're still in a bullish market, just a normal pullback in a bullish market. Also, this is not even to the degree of what we had here around the 5th of March. So all good. And I think support levels are clear. Now, when wave 2, or as soon as wave 2 is finished, then we'd like to see the third wave rally higher. Obviously, the larger degree third wave should reach ideally $2.79 plus. Ideally higher, then we should get a wave 4 pullback. Could see a pullback to around about $1.70, maybe even a little lower, but that will depend on how high the third wave goes. And then the fifth wave could reach sort of the area between $3.80 and $6.24. That's far out at the moment. So let's first see if the market can hold this wave 2. Looking at the 1 hour chart, I mean, at the moment, it looks to me as if, well, it might get one more low Looks to me as if this is an ABC structure, A wave down, B wave up, maybe C wave, and might get one more low there, you know, like that. Okay, A, B, C, we'll see. Initial indication that a low is in would be a break below above that last swing high there. $1.05, $1.06 would be an early indication that a low has formed. And yeah, then obviously you would need to break above $1.12 and the $1.16 level here, which is the wave one high. So it could get one more low, you know, maybe even two more lows, yeah. So that's, but there's plenty of space. So obviously the micro count doesn't really give us much value in terms of prediction, but it could be a 1-2 setup there. And then either this is the 3, 4, 5, or the third is even still in the making. But I just gave you some levels to watch. I mean, essentially, as long as we're not breaking below 56 cents, we are watching for further upside, yeah. That's my update about Pyth. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.